Hey everyone, welcome back. So after learning about all the errors that do not affect the balancing of trial balance, let's practice a few questions from the past papers, mainly paper 1, that is MCQs, so that you get an idea that how this topic is tested in paper 1. Right? So let's begin. The first question that we will be doing is from June 22, variant 12. Question number is 7. Okay, so the question says, what is an example of a compensating error? Right, you remember what compensating error was? When the error was in two or more than two accounts and it was not revealed by the trial balance, the error was not because of the same transaction affecting those accounts, but the error used to be independent of these accounts, and the trial balance used to balance because coincidentally the amount of error in both or more than two accounts used to be the same, right? So it was not revealed by the trial balance. Now let's read the options one by one and find out that which amongst these is the compensating error. Option A says a payment for office equipment. Okay, so a payment for office equipment repairs, so this is an expense, was debited to the office equipment account. So what should have been done? I should have debited my repairs account, which was an expense for the business. However, what have I debited? I have debited my office equipment account, which is an asset, non-current asset for the business. So is this an example of compensating error? No, it's not. But what is this? This is the error of principal, right? Because the class of account in which the transaction is recorded is different. One was an expense, and the one in which it is recorded is an asset account. So this is not the correct option. Okay, but option B says a purchase of goods, from C Jones, right? So how this should have been recorded? Purchases debit and C Jones should have been credited, but this was credited in the account of C Jones. Okay, so first of all, this is not a compensating error because C Jones and C Jones account, both of these accounts are somehow related to each other, right? Assuming that C Jones was another supplier for the business, so instead of making an entry in C Jones account, this was recorded in C Jones account. And this type of error we know is called error of commission when the class of account is same, right? So this is also not the correct answer. Let's move to option C. Option C says the sale of goods 65 to A Aziz was entered in the books as $56, right? So the original value of the transaction was 65, however it was recorded in the books as $56. So a problem in the digits. This is also called a transpositioning error, as the actual amount was 65, however it was recorded as 56. So what type of error will this be? If this is recorded like this in the sales day book, so this will be called error of original entry, when the amount recorded in the T accounts or in the day book is wrong, right? This is also not correct. This means that option D might be right. So let's read option D as well. It says the wages account, expense account, was undercast by $100, and the rent account was overcast by $100 as well. So the error is not because of the same transaction, right? However, the trial balance still balanced because why? Because both of these accounts, they appear on the debit side of the trial balance. One is undercast, that means that understating the debit side of the trial balance, right? But another account that also appears on the debit side of the trial balance is overcast, means overstating the side of the trial balance, right? But however, since the amount was same of the error in both of these accounts, the debit side still matched with the credit side. The problem was in the individual balances of wages and rent account, but it was not revealed by the trial balance because it is a compensating error, right? One error in one account has offset the effect of another error in another account, right? Now let's move to our next example. This is from November 21, paper 12. Question number is 10. The question says a sales invoice 800 was incorrectly recorded in the sales journal as $1,800. Okay, and how did this error affect the trial balance? Okay, so the sales invoice the amount was $800. However, it was recorded in the sales journal as $1,800. Now, first of all, let's identify this error. What type of error is this? The transaction is correctly recorded in the correct day book, that was sales journal, like sales day book. However, the amount is wrong, and this wrong amount would have been posted in the T accounts as well, in the sales account and in the debtors account, right? So this type of error we know is called error of original entry. Sorry. Now the question is not to identify the type of error, but how this error will affect the trial balance, right? So this means that right now this transaction has been overstated, right? More has been recorded in the sales account as well as in the debtors account. Now let's read the options. Part A says, option A says, the trial balance balanced. Of course it will balance, right, because this is an error of original entry, that error which does not affect the balancing of trial balance. So yes, it will balance, but both totals were overstated by $1,000. Okay, let's not conclude here whether this is right or wrong. Let's read option B as well. The trial balance balanced, right, it will balance, but both totals were understated by $1,000, right. Now how to identify whether this transaction overstated both the sides or understated? The actual value of this transaction was 800. However, it was recorded as 1800. So now, right now, we can see that 1000 more is recorded in this transaction. This means that how the double entry would have been made: debtor debit and sales credit by $1,800. 1800. Right? Debtors account, we know that this account appears on the debit side of the trial balance, and sales account, it appears on the credit side. So by recording more 1000 on both the sides, right, both the sides have been overstated by $1,000, my trial balance failed to reveal this error. So option A is right or option B is right? Option A is correct, because right now more has been recorded in both the sides. How much more? $1,000 more. 800 was the actual value of the transaction. This should have been recorded, but by recording it as 1800, I have recorded more on both the sides. So option A is correct, right? Option B can't be correct because it says understated. Understated, it would have been understated if this value was lower than the actual value of the transaction. Option C says the trial balance did not balance. So this can't be possible because this is an error which does not affect the balancing of trial balance, so it's not correct. Same goes for D as well, that the trial balance did not balance, so it can't be right as well. Now let's move to our next question, which is from June 21 paper 12. Question number is 9. Okay, so this is related to trial balance. You remember we studied about trial balance as well in the first video, that what is its format and what is it used for, what are the benefits of preparing trial balance, right? So the question is, which statement is not true about a trial balance? So this means that 3 statements, like 3 options will be true, and one option will be a false option, right? So we have to identify this option which is not correct. Okay, so let's read one by one. Option A says it is a list of ledger account balances at a certain date. Of course, this is right, because a trial balance shows all the ledger account balances prepared at a particular date, right? All the assets, liabilities, capital, drawings, incomes, expenses, all sort of accounts. This is correct. Option B says, so this can be the right option, although this is true, but we have to find out the wrong option, right? What is not true about trial balance. Option B says it can assist in finding arithmetical errors. Yes, this is also true. Why? Because if the trial balance did not balance, this means that there are some problems in the T accounts, so it can locate errors, so it can assist in that. So this is also right. Option C says it is part of the double entry system. Okay, so what do I mean by double entry system? Double entry system means that for every debit entry there is a credit entry. So this is right, but this is for while we are recording a transaction. We are not recording separate or individual transactions in T accounts. Rather, we just write the balances of ledgers or of T accounts in the trial balance. So a trial balance is not part of the double entry system, right? You will not make any entry in which you will be debiting trial balance or you will be crediting trial balance. No, we debit and we credit the T accounts, not the trial balance. So that is why option C is the correct answer. That is, it is false. Trial balance is not part of the double entry system. It just shows the account balances at a particular date. And what does the last option say? It says that it is useful in preparing financial statements. Of course, it is very useful, because after the extraction of trial balance, we prepare the income statement and the statement of financial position from the trial balance. So, option C is the correct answer. Now, let's move to our next example. This says that which error is an error of original entry? Okay, again an error of original entry question, but it has really good options, which will help us in revising our other errors as well. Okay, so this time let's start reading from option D. So option D says sale of surplus office equipment on credit to Janet for 230 not entered in any accounts. So we sold some surplus non-current asset to a person named Janet on credit, and this transaction was not recorded in the accounts anywhere in the books. So can this be an error of original entry? No, it can't be, because as it says not entered in the account, so this means that this is an error of omission. Transaction is completely omitted from the records. Right? Now let's move to option C. Again, sale of surplus office equipment on credit to Janet for 230 entered in the sales account and Janet's account. Okay, so it should have been recorded in Janet's account because we are selling her on credit. So Janet account is correct. However, by recording it in sales account, this is the problem. Sales are never credited if you are selling any non-current asset. Sales account is only used to record sale of inventory, sale of goods, right? The commodity in which the business deals in. If your business is such that it is a stationery shop, right, a bookshop, so if it sells books or any other stationery item, pencils, staplers, etc., etc., so all that sort of goods will be recorded in the sales account, right? Sale of those goods are credited in sales account. However, if you are selling a non-current asset, right, this is an unusual sort of sale, not a regular sale, so that type of sale can never be recorded in the sales account, right? A separate account is maintained, is established for that transaction, and that is called a disposal account, right? So for disposal of non-current assets. So this is not correct. Okay, so since Janet is other receivable for the business, right, we are selling non-current asset on credit, so Janet's account should have been debited, and it has been debited correctly, right? However, disposal account should have been credited. However, instead of crediting disposal account, we have credited sales account. So this can't be. First of all, this is wrong. This is not an error of original entry, because it can be either an error of commission if the business earns profit or an income on the sale of non-current assets. So sales being an income account, then this error will become the error of commission. However, if the business earns a loss, so it will be written as under expenses heading in the income statement, then this can become an error of principal, because sales again is an income account, and if the business earns a loss, so that will be called an error of principal. But we are not asked about that. We have to identify whether this is an error of original entry or not. So this is not an error of original entry, right? Option B. For error of original entry, you just have to see that whether the amount that was recorded in the day book or in the T accounts was right or not. The rest everything is correct, but here the account is wrong. Option B says sale of surplus office equipment on credit to Janet for 230, right? Everything is same right now. Entered in the office equipment account and Jason's account. Okay, so first of all, Jason's account. Why is Jason's account involved over here? That is wrong. So if Jason is other receivable for the business, this can be called an error of commission, because they both will belong to the same class of account, right? And this is not an error of original entry, right? However, the disposal proceeds or what will be received in future, that is $230. How this transaction should have been originally recorded, Janet's account should be debited with 230 and disposal, right, disposal account, disposal of what is the non-current asset, office equipment, should be credited with $230. The disposal proceeds or what will be received in future are never recorded in the office equipment account, never. Only the total, the original cost of the non-current asset is credited in the non-current asset account and never the disposal proceeds, right? So this is totally wrong. So let's move to our last option, which is option A. It says that sale of surplus office equipment on credit to Janet for $230 entered as 320 in both the disposal account and Janet's account. So what is happening over here? The correct value of the transaction was 230. However, it has been entered as $320. So the amount is wrong. However, the disposal account and Janet account, the accounts are correct, right? So on the correct sides of the account, in the correct accounts, a transaction is recorded but with the wrong amount. So that is why option A is correct, because this is an error of original entry when the amounts are wrong. Again, there is a transpositioning error. Now, this was an interesting question. Let's move to our last example. This is from June 21, variant 12, a pretty easy question. It says that a check 85 received from Shakil. Okay, let's stop over here and let's think that how this would have been recorded. A check 85 received from Shakil. So we are receiving check. So this means that bank should have been debited with 85 and we are receiving from Shakil. So Shakil will be credited. Right? Assuming that Shakil is our customer debtor, so his account will be credited. However, what has been done was credited to the account of Shams. So this means that this part of the double entry, the debit part, this part is correct. However, this part is wrong. Instead of crediting Shakil, we have credited Shams. Now the question asks us to make the journal entry which will correct this error, right? So before even reading the options, we can make the correcting entry ourselves. So first of all, will I use bank again to make the correcting entry? No, bank will not be used because this part of the double entry is correctly recorded. However, the credit part is not right. So first of all, do what should have been done, that is credit Shakil. So Shakil will now be credited because we haven't done anything in his account. So Shakil will be credited, and whom have we credited instead? Shams. So eliminate the effect of the wrong entry from this account by now debiting Shams by $85, right? This is an error of commission, assuming that Shams is also another debtor for the business, right? So this will be your correcting entry. Now let's find out where we can locate this correcting entry. In part A, in option A, bank is involved, so wrong. In option B, Shakil is being debited, so no, we will be crediting Shakil, so this is wrong. C, Shams debit, yes, Shams will be debited, however bank will not be involved, so that is why option D is correct, that is Shams debit and Shakil credit, right? So I hope that by now you will have a very good understanding of what errors not affecting trial balance are, how are they located in the question, and how are they corrected as well. So that's it for this video. I'll see you in the next one.